This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 110, brought to you in association with Blue Motor Finance, Capital.com and Smart Pension, and I'm delighted to be joined today by Daumantas Dvilinskas, CEO and co-founder of TransferGo. After a run of 3 mega incumbents, we're back with a young and indie. Mind you, TransferGo is not so young, having formed back in 2012. Their origins are in remittances, but I wonder whether in the digital age there is a clear line between a remittance and a transfer, mobile phones being so prevalent. And what is the difference between an international and payment and FX? After all, most international payments require an FX thingy in the process. They have a nice simple slogan: send money around the world, fast, for just 99p. Wow, that's cheap. Significantly cheaper than the competition. And that's what we're here to discuss. How can a company charge so little? We focus on the transaction fee component today and how to achieve that, as they are the most transparent fintech I've come across in terms of how they actually do it. Many FX fintechs obfuscate or exaggerate massively about so-called P2P FX, which kind of exists but is super rare. As I've touched on in every episode with an FX fintech, all, and I repeat, all, from the largest to the smallest FX dealers, old or new, have to deal with the FX market. In TransferGo's case, they had a variable 2% to 0.45%, a flat rate above £1,000, to the mid-market rates, which is again super competitive compared to the better known names. Not only that, but you get the price that you see on their app. None of this indicated rates nonsense, which leaves you with no idea whatsoever as to what rate you actually get when you deal. Anyway, as there's always a cost of doing business, as I say, today we'll do a deep dive on the transaction fees, not the spread above mid-prices. At present, TransferGo does $1 billion of transactions per annum with a customer base of 1 million. There is something about these kind of companies that attracts powerful chairmen. Back in LFP110 with World First, we heard that they had an old CEO of mine, David Clementi, former Deputy Governor at the Bank of England and now Chairman at the BBC. TransferGo's chairman is Renier Lemens, who is former CEO of PayPal, EMEA and COO of Barclays. How does one disrupt the disruptors? Plenty to talk about, so let's get on with the show. Labas, Daumantas. Kadaro.
Hi, thanks for having me.
Good. Right, that's my Lithuanian done. It's probably even not Ritas anymore. Morning. So anyway, you're the first Lithuanian ever on the podcast, which is an amazing achievement. And thank you for rolling out the red carpet as a result. Or maybe I should roll out the red carpet for you. And we thought about talking about something interesting, which not a lot of people may know about. Now, not a lot of people may know about Lithuania. I know a little bit, having been there once or twice. But not many people know that you were the greatest thing ever in Europe once, a bit like the British. Once.
It's super cool to hear you say that. Thanks for having me here. Yes, Lithuania has a very interesting history that spans thousands of years now. In the 13th century, we were the biggest country in Europe, and then we made some bad decisions, and now we have 3 million people, but we're still doing great.
And when you were very big, you stretched from the Baltic to the, whatever it is, the Black Sea. My geography gets a bit fuzzy.
Yes, that's correct. All the way from the Baltic Sea to the Black Sea.
So what went wrong then?
I think some bad partnerships, bad intermarriages, and a delay in expansion, I would say. I think we had a very nice way how we could actually expand even more, but we decided to pause, decided to be a bit more conservative. And when you're not expanding, someone else is.
Yes, that's true actually. As recent listeners will have heard, I keep dropping in snippets of where I am in the book. I'm currently reviewing the 15th century and 16th century companies in England and the evolution of the company. And of course the backdrop to all this is the British Empire itself, and where did that come from? Because when the East India Company was formed, which is my case study for the company board, in 1600, England was piddly, pathetic, and no one gave a damn about it, and all we actually made was wool, and even then we didn't make it. It came from sheep. And how did we go from that to running a sort of quarter of the world? I think the question of why we gave it all back is another one entirely, but I think a lot of that actually is because the World War I and World War II cost us so much money. I mean, it's about 150 billion a pop. So 300 billion later, even if it had been a climate, which it wasn't, to continue the empire, we couldn't afford to run it actually. And interestingly, modern scholarship is that the British gave up too soon and ran away too fast. And if you look at, for example, Lee Kuan Yew in Singapore, he was begging the Labour government when he was in the 60s not to run away so fast, and the same thing with Nehru, who was saying that actually British got a lot going for them, despite the fact we imprisoned the chap. But they didn't want to cut the ties. Whereas in your case, didn't sort of Russia come along and say, thank you very much, we'll have an empire?
So Russia came along way later, maybe 300 or 400 years later. At that point, we ruled big parts of what's today is Russia and other countries. I think it's a problem of vision. I think when you're small, as we were before we started our armada, we had a very clear vision where we wanted to go, right? And this from Baltic to the Black, that was clear. You know where you're going. When you achieve your vision, where do you go? What do you do? And I think once you don't have that, it's very difficult to make the next risky bets. And so I think that was the problem.
Yes, and that's one of the things I found. I mean, I didn't like history at all at school, but one thing about writing about these histories actually is that forgetting what we're talking about, whether we're talking about the evolution of the state or evolution of the company or evolution of the individual, there are certain sort of characteristics which across all of these domains are very important and are very important in fintech. Having a clear vision.
Exactly.
Having a desire to go for it, looking at your mistakes, learning it, and all this kind of stuff. And actually, there's a very good book by Nirad Chaudhry, who was born in Bengal in the late 1800s and lived to 100, I think, ended up living in Oxford, called The Autobiography of an Unknown Indian, which is regularly claimed to be one of the best 50 books in the 20th century. And I haven't read it, but fortunately Bridget's reading it. And he basically says the English lost their self-confidence. Somehow, in the 1500s, we thought, oh, that's good, we'll go out there, let's do it. And then somehow, as related by somebody who lived through the last 100 years of it, they kind of think, oh well, we'll go home kind of stuff. It's something that expands and contracts. I mean, my daughter did A-level history, and she comes away from A-level history thinking sort of the British are the worst thing that sort of ever happened to the world, and the empires are terrible. Well, empires may or may not be terrible. The answer is every power structure does good and bad, but the world we live in has been entirely formed by empires. Roman Empire, Mongol Empire,
Yes.
Moorish Empire, British Empire, Spanish Empire, Lithuanian Empire, Russian Empire, Chinese Empire, and now we live under the American Empire. So
That may be receding a bit?
yes, well, that's an interesting question, isn't it, you see? Going back to Eastern Europe, I used to have Czech in-laws for my sins, and the way to upset my relatives in Czech Republic, or Czechoslovakia as it was, and I was there when it split into the two, was to say Rimska Říše, the Russian Empire, because that really pissed them off. No, it's not an empire, blah, blah, blah. And in the same way, you'll probably never ever see on the TV references to the American Empire, even though we don't actually need a foreign secretary or defense secretary, because they will say whatever he said, pointing to Washington. So, going back to Lithuania, which may have been associated with the empire or the imperial collapse, I thought the other claim to fame that I remember that stuck in my mind was that, impressively, you were the last people in Europe to be converted to Christianity. You were very pagan for quite a long time.
Yes, indeed. So, we are conservative as folk, I would say that, and we stick to our guns for as long as possible. And we have a long history of wars between us and the knights of Europe, right? And we have a very good history of defeating them. So actually they tried to Christian us for hundreds and hundreds of years. We just were quite good at fighting them off. And I think as a result of fighting them well, we were able to expand our territory. Because it's not that we were so keen to attack, it's just we were attacked all the time. And as a byproduct, we were sort of expanding our country as well.
Ah, excellent. Well, moving on to your career journey, presumably paganism being strong over there, you were sort of came out of an egg or something, but now you're over in London or in Canary Wharf, so how did that work out?
So I did my university here, Lancaster, 10 years ago, so this is my second home away from home, and stayed in this country in one way or another since then.
Excellent. And what made you wake up one morning and think, I'm going to form TransferGo today?
So TransferGo founding story is really born out of frustration. So me and my current co-founder and CFO, we used to do businesses, even in university. And one of those businesses was we were providing merchandising equipment for universities here in the UK. And as a result of that, we had to pay international money transfers to our suppliers on a regular basis. And we had a huge problem because 5-6 years ago, it was Main Street banks, cash operators. These are the guys that we could choose from. And I'm not even talking about the fact that it was very slow, very expensive, no transparency on the pricing or anything. They just inherently didn't care about us as a customer, and felt that it wasn't part of their business to care about their customer. And we once got this letter from a bank that actually started a lot of things here, which pretty much one of the mainstream banks here in this country sent us a letter saying, yes, we agree that we messed up a transaction because they sent the transaction to the wrong country, which was Latvia versus Lithuania. For them, it wasn't much of a difference.
Yeah, it's both got L, it's both somewhere over there in the Baltic.
It's sort of there, but it was a different currency back then. It was a different country. So we lost our suppliers because of that. So that wasn't that much fun. And they sent us this magic letter, which pretty much says that, yes, we agree, we really messed it up, but it's within our policy to do nothing about it, and please do not reach out to us for this again. And that letter really struck a chord with us, because tell me another industry where you can get this letter from, where you buy service, like going to Tesco's and buying a rotten tomato and saying, sorry, it's not within our policy to sell you, fresh tomatoes, which is insane, right?
And it poisons your family. Your family are all ill in hospital.
Yes, but that's, they have a policy not to do anything about it. So, and then we thought, okay, so we need to change it. We need to sort of sort this out for ourselves. And my co-founder said, listen, I have my personal account in the Baltic states, so why don't I just pay out locally to our suppliers, right? And we'll figure it out. That was the whole idea, right? And he started doing that. We instantaneously got better deals from our suppliers. We solved this problem for ourselves overnight. And we thought, okay, this works really well. Why don't we scale to everybody else? So without any financial services experience at that point in time, we said, okay, let's give it a shot. And ignorance was a blessing.
Well, I was about to say, yes, not knowing that something's impossible is really helpful, because if you know it's impossible, you don't try it.
Yes.
If you don't know it's impossible, you give it a go. And somehow, if you're lucky and fortunate and good, you kind of find a way.
Yes. And 2 different licenses, and a year later, having spent pretty much everything we gotten from, and we didn't have a lot, we managed to launch TransferGo and just get first 200 clients, and things fall from there.
It's interesting hearing your story from the Baltic states, because I don't know whether you noticed over the years, but you mentioned Lithuania, of course, you're from. There's a company also beginning with the word transfer. It's from Latvia, who had a similar ideas and a similar approach at a roughly similar time. So anyway, let's look into this topic then. I mean, firstly, as I say, I kind of rather, after a while, forget what the exam answer to the question, what is the difference between a remittance and a payment should be? What is the difference between a remittance and a payment as far as you're concerned?
So the way we see it, remittances are transfers from one person to another person overseas. Payment, it can be a payment from a person to a business to pay for certain goods and services. So I think if it's person to person, and if it's a small transaction, you can describe it as remittance.
The other way I've heard remittance is used by World Remit, for example, when they were on the show, is associated with migrant labour, especially from what used to be called the sort of third world. I mean, some Pakistani worker working in Dubai on a skyscraper or something like that needs to send money home to Karachi or a village out there. So that's a different use. And then in terms of the separation, in your mind, between remittances or payments and foreign exchange, or whether they're similar or the same?
So I think it all is based on the transaction amount. So if you're sending a larger transaction, let's say north of £1,000, north of £2,000, that's already FX territory, because that's what you care about as a consumer, is how expensive my currency conversion is, because then it becomes very meaningful. So, for larger tickets, we think ourselves that's an FX market. For smaller, that's a remittances market, because there's very different focus areas for the consumers and what they care about.
And in terms of you guys at TransferGo, which part of the market are you predominantly in?
So we are in both. We have a very competitive offering for both, but we are very focused on the smaller transactions being sent out in real time. That's the market that we really care about, is people who are sending monthly transactions back home, providing for family, paying for bills, etc.
Excellent. Well, just in case any of the listeners want to challenge your current position and catch up with you and create a business themselves, which will be able to do things for 99p, let's end up with sort of how come this costs 99p, because off the top of my head, you're the cheapest way of transferring money.
Yeah, so, the reason why we can do it quite competitively versus the traditional means especially is because we do it completely different to how traditional banks would actually send money.
Right. Okay, so I'll press pause on that just to keep everybody waiting and make sure they listen to the whole podcast to find out how that happens later. We'll come back to that. So there are these sort of payments-y networks things around, and people like me who sort of tended to keep away from the plumbing in the basement of buildings, tended to keep sort of far away from it in the past. So there are these networks. There's a payments network in Latvia, and there is over here, and there will be one in Italy. So what are these networks that are going around that you need to connect? I mean, you mentioned before that your mate had an account. What are all these things that we're trying to connect in the first place, if you're trying to sketch them on a whiteboard?
Sure. So effectively, the way we see it at the traditional banking space is it's like a collection of different islands of networks. So we have the HSBC network, you have the Barclays network, you have the PayPal network. Everyone is creating their own, right? If you look specifically at money movement within a network, it's quite efficient, right? So if you want to send money from one Barclays account to another, even another country, that's quite efficient, right?
For them, but not for the consumer, because if I'm a consumer and do that, I'll suddenly get lots of fees whacked onto me.
Yes, that's another question in itself, of course, but inherently, it's quite efficient within the same network, but that's not the world that we live in. I mean, senders and the recipients more often than not are in very different networks, but they still want a good service. And so bridging these networks or bridging these islands together is something that we felt that was a problem worth solving. Because what we wanted to offer is that a customer comes and they don't really care about which network their recipient is. They just want the money to be in that network, whatever that is, that bank account, whatever it is, in real time and as efficiently as possible. So when you think how to bridge these networks, that's a completely different challenge in itself, because you can't really create a new network, because it will have the same problem. It would be just new network on top of everything else.
Okay, so pressing pause on that one. So you're using the word network in terms of, let's just say, I don't know what it is, 24 global international banks who have got banks all over the place and they send money all around the world internally very easily. And so the first obvious answer is that how that's done is normally within a country. So in the UK, you've got FPS, faster payments, and a bunch of Bank of England stuff we don't need to worry about between the banks themselves. And there will be something in Lithuania that connects all the banks so that check or a payment works from one bank to another. So all these networks that you're talking about are connected within countries, but what is lacking is the global connection.
Locally, when you send locally, there's less of a problem usually, and it's reasonably efficient. However, when you want to send money internationally, the way a bank would send money internationally is quite a cumbersome system, and that system is called SWIFT. So the way it works is like they would actually send that individual transaction internationally. So let's say Barclays would send money to India, they would usually send the money via SWIFT to another bank. There would be a correspondent banking or clearing banking in the middle. And all this process with SWIFT, and it will take 3 to 5 business days and will cost a fortune just because of inherent cost of this process in place, right? And that's when you want to send the money to a different network. So if non-Barclays recipient would have to receive the money, right? And that's because SWIFT is inherently a collection of bilateral agreements within different banks. Right? So there's no standardization there at all.
Oh, I didn't know that.
And that is really the inherent problem with SWIFT. And it's very difficult to change because that's already how everyone communicates. It's sort of like a broken messenger for banks, like broken Snapchat for banks in a way.
So just on the broken things, that's interesting. So what I was thinking was that it was historically a very successful way of solving the global interconnection problem between banks. So for a long time, you have been able to pay from pretty much any country to another country in this methodology. It has the disadvantage that it's old technology, so it's clunky. Also that it's slow and expensive. But is it actually broken? Because payments seem to work, apart from you're a bit unlucky, and sometimes people are, quote, unlucky.
So I think it depends on which times you live in. So SWIFT was created, I think, in 1973. So at that point in time, ABBA was the hit globally.
I know, I bought their album. It's the only pop album I bought, ABBA Arrival.
So that was a different world to what we have today.
Yes, I remember it. Yes, you were allowed to tell any joke whatsoever, then this thing called political correctness hadn't been invented.
Yes. And Eurovision was also very different back in that day when ABBA was winning, right?
Yes, back in that day, there were exchange controls in the UK. You couldn't just freely transfer any amount of money.
Exactly, and mobility of capital was different. People weren't working in different countries, weren't buying their goods from Amazon. It was a different world, right? At that point in time, you didn't need a better system probably, and SWIFT was doing a good work. But fast forward to what's happening right now, for those people at that point in time, this is now science fiction. Pretty much. Everyone's on their mobile, traveling everywhere across the globe, buying goods everywhere. It's become really decentralized and mobile. So in this world, that system built in 1973, it is lacking behind. Let's take it that way. So I think it's just, time comes and a refresh needs to happen in a way.
Okay, so that's the networks we're trying to connect. Explain how they developed and how they work at the moment. And the interconnection problem is that we're using this 1973 system for payments, as we discussed a couple of episodes ago with Nick Kerrigan from Barclaycard. The credit card network evolved sort of pretty much in parallel with this, maybe slightly later. And that works relatively efficiently, relatively rapidly, although not always as cheaply as it might be. So, it's interesting you say you were sort of an outsider to FS, because clearly you're an insider now. You've read all the manuals and all that kind of stuff. What are the possible ways, then, in which fintechs can or could or do cope with this problem? I mean, TransferWise are notoriously given a narrative for quite a long time about peer-to-peer payments, and as I've said on the podcast a number of times over the years, from what I know, that's the small minority of what they actually do, because the chance of somebody wanting to change 1,042 euros at the same time as someone else going in a direction is next to zero, even if they do netting at the end of the day. And my understanding is that certainly historically, most of the business they just gave through Currency Cloud, which is a big back end, which when Mike Laven was on the show, he explained was pretty much a retail to wholesale transformation. They get loads of small deals, and when they've got one of it, whether it's 1 million or 10 million, they just sort of hit the HSBC bid online and that. So how can this network problem be worked around? I mean, obviously, leaping ahead to the conclusion, you are not charging your users 99 pence by going through Swift and absorbing a huge cost yourself.
Yeah, so there are a couple of ways how you can try to solve this problem. It's a big problem, it's a global problem, right? So how do you eat an elephant one step at a time, right? So there are sort of 2 or 3 ways right now. The first way is just go out and open bank accounts at every single bank or financial service company in the world. And then you are on every single network and you bridge them all together, right? Which is, internally we call it the sledgehammer approach, right? You just build up your global Swift. This is incredibly time consuming.
Which is a little bit like in the pooled payments, which is like Go Cardless. Mm-hmm. So with Go Cardless, they're doing precisely that. They're going around opening bank arrangements all over the place so that you can do direct debit. So for example, if the world suddenly changes and everybody's got to pay me $1 every time they download the podcast, and then I set up a whole bunch of arrangements like that. And no, I go to Go Cardless, and they've done that, and eventually they get around the whole world, but it takes a hell of a long time.
Yes.
So that's a sledgehammer. Got
yes.
it.
So we do that a lot. We like sledgehammer, but it takes time, and we're going to be continuing doing that for years and years, and eventually we'll get to a place, right?
And the problem with sledgehammer, though, is that don't you then end up having to absorb all these costs? So, you send some money to Bolivia from London through Barclaycard, and that takes a Barclaycard cost is associated, and then in Bolivia it goes from Barclays to HSBC, and then it goes to another country. So,
in theory, if you had a bank account in every single bank in the world, you would be paying everywhere with a local transaction, which is our model. That's why, effectively, the reason why we can do it very cheaply, because we don't send money via Swift. So, with our model, having all these bank accounts is a very good thing, because you would effectively, we're just paying a recipient with a local transaction, and that's it. And you are receiving local transaction on the send side. And we call it local in, local out payment, right?
Which is like half a peer-to-peer thing, which is there's a one transaction, but there isn't the opposite, equal and opposite at the same time.
Yeah, so we've never seen this world that other people are talking about,
no,
where you have
balanced.
Have I. No. Because if it was balanced, then the concept of emerged and emerging markets wouldn't exist. The flows would be equal, so we live in equilibrium type environment. You, of course, have a percentage of transactions you can net that exists, but we've never seen that it can be sizable enough to call it a model. It's a side thing more than a model. So yeah, for us, we don't look at peer-to-peer model, we look at local in, local out. So we bypass Swift, we don't send individual transaction cross-border. And that's the whole idea. So if I want to send £100 to Lithuania, and I do it via you guys, I transfer £100 to your bank account or whatever, or your client account or whatever it's called, and so then transfer goes, London account increases by £100, and I think that you're real time, aren't you? Yeah. So one of the advantages of your system is that you get the rate you see. Yeah. Unlike other people who say this is an indicative rate, and a little bit later they tell you what rate you've got, which always makes me a little bit worried from a sort of compliance angle, from my perspective. Anyway, so then you've got £100 more here, and then at the other end, you just debit your local Lithuanian account to pay the client. Yeah, so exactly. So we get the money in the UK in real time, pretty much, right? And then that money stays there in the UK. It doesn't go anywhere. Yes. It just stays there, and then we pay out to your recipient locally with a local transaction there, based on the information you provided. And since that last mile usually happens within the same banking group, so we would pay out that recipient from our Sweat bank account in the recipient's Sweat bank account. So that last mile is also real time. And that's why we can do 30 minutes guarantee on this. And then at the end of the day, presumably, well, wait a minute, what does the end of the day mean when we've got a sort of a round world? But forget that for the moment. Let's just say it's all one time zone. Then what would happen is at 5:30, you'd look at all your bank accounts, go, oh, we've got excess of 500,000 in pounds and minus 2 million in euros and so many in Bolivian doodars, and then you just flatten them all. Yes, you net it, and you usually, it depends on the volumes, but you usually net it 2 or 3 times per day, because it's money is moving around. That's what I mean. It's not an end of day, because our end of day, someone's just getting up in the morning, etc., etc. Exactly. So there isn't a thing. I see. So anyway, so you presumably are a 24-hour operation. So today we're not yet a 24/7 operation, because we're subject to cutoff times locally. So even banks locally stopped sending money, because not everywhere we have the beauties of local payments like you have here in the UK. So you are solving local inefficiencies elsewhere. But I think with the dawn of blockchain and what we see right now starting to happen, the 24/7 reality is going to be soon here. Okay, so in terms of where we are at the moment, how many countries or currencies are you covering? So today you can send money to 45 different countries globally. So we have the entire Eurozone, and we have major global destinations, including Australia, Japan, US, South Africa. the list goes on, including Ukraine, Russia, Turkey, all the emerging markets as well, ramping up.
Right, okay, so I understand that, local in, local out. You've got a bunch of bank accounts in these countries' currencies, and people put money in on one side, on the other, and you just take it out from another account on the other side, and then several times a day you balance all that down to zero. As you say, the weakest link there is that plenty of countries the bankers don't bother coming in on Sundays, and so you can't move money on Sunday, for example. One reason I actually quite like Monzo, because for some reason I seem to be able to pay people on a Sunday afternoon. Maybe it's just within Monzo or something.
Put in the same network, right? So that's again a new network that is efficient inherently, but that's a slightly different problem.
Yes. It's a very useful one if you're a parent of young daughters who are always running out of money at the wrong time and say, Dad, there's a saying that money isn't everything, but it keeps the kids in touch. Anyway, and certainly something like Monzo is quite helpful, because on Sunday afternoon I can send them 50 quid if for some reason they need 50 quid somewhere and lost their cards, or the usual thing. Okay, so that's where we're at the moment. So there are all these local restrictions that are kind of on the speed of light, as it were, or the time of day that you're doing it. You mentioned that you like the sledgehammer approach and you'll keep going, so at some point presumably you'll get to 199 countries or however they are and be able to do anything anywhere. So where is it going? Is it for you? I mean, 99p seems incredibly cheap to me as a fixed rate for a transaction. Are you just going to roll out more countries, or get the price down, or change it completely, or?
Yeah, so at scale, there's economies of scale work. So I would envision in very short future that we may also be able to offer completely free transactions if the customer will be willing to wait a couple of days, for example. So that's definitely an opportunity going forward. Whereas for us, it's all about expansion. We're still a relatively small business, counting maybe 700,000 customers today. So there's plenty of room for us to grow.
You say 100 odd staff?
100 staff, yeah, across 5 offices right now.
In which countries?
Here, Canary Wharf, Vilnius, Lithuania, Berlin, Warsaw, and our latest in Istanbul. So we're building those offices up and scaling into emerging markets quite a bit. And lastly, I think, the way we see it, we have recently become the most trusted company in our space based on Trustpilot. So we've hit 96% 5-star rating, which is
very good.
We're very proud of that.
Yeah.
And coming back to the letter discussion, when we wake up in the morning and we are doing something sort of the opposite of what that letter stood for that we received from a bank, and consumers actually love it. Based on this consumer love, we think that we can do much more than just cross-border payments. It's an invitation for us to offer them new services. And so we recently launched the ability to buy and sell crypto on TransferGo app. And there is more exciting things that are in the pipeline for us, because it's just scaling the trust that we've built with our consumers.
Yes, you can draw a sort of a 2G chart of how much of your resources you devote to sort of product creation and how much you devote to marketing, and you can put sort of all the fintechs around that thing. And some fintechs start off by raising lots of money and spending lots of money on marketing and get very well known, and other people like you put a lot of money and a lot of time into creating something that's really valuable. He says, trying to persuade himself that while I'm doing my book, spending ages and ages writing far too much in this book will eventually be very valuable, and people will see the sort of the weight behind it. The strength of doing what you've done, which is to go through this painstaking effort to create it all and create a really good product, is that you've got a really good product. The sort of frustration, presumably, is that it's quite a long time before you really get going. It's a bit like the British. The Empire didn't really get going for a couple of centuries. Boats set off, and it was generally a bloody disaster at first. I mean, I was just talking of Russia, I was writing about the Muscovy Company, 1555, which, this is kind of a Far Side cartoon thing. It set off to find China and the Spice Islands by going northeast from England, which is a very unfortunate direction to go, as everybody knows now, but they didn't know that then. Anyway, on the first expedition, before they got much along the northern coast of Russia, 2/3 of the boats froze to death, and then they started trading with Russia.
Yeah, well, I'm a big fan of the saying, which is, we are overnight success that took 10 years to make.
Yes, absolutely.
So this is one of those.
Exactly, that's the model, that's what we were talking about. And it's the same thing with the Beatles. People say, the Beatles are great overnight success. No, they've been slogging away in dives and rubbish pubs in Germany and Liverpool for ages before they became an overnight success. But at least doing that, they're very well practiced for when they hit the volume. Okay, so we'll talk a little bit more about TransferGo at the end, but I like your nice, simple, clear proposition, and I like the transparency with which how you approach what your business method is, especially in a market where there's been too much spin about it, although the Advertising Standards Agency have been very active in that regard with respect to one company. Anyway, before we wrap up the show, I'd like to thank all the listeners out there, and I'd like to thank my brand partners for the podcast, Blue Motor Finance, who are, according to the 2018 FT1000, the fastest growing FS business in Europe. Blue's award-winning technology has supported over $1 billion of lending, working with over 3,700 UK motor retailers. Capital.com, making CFD trading more accessible and engaging in 23 languages. 500,000 downloads in 51 countries. Check out Capital.com or download the app. Trading is risky. Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. So I think most people listening, actually, your business model is nice and simple and nice and clear. Well, by now have got the idea that you transfer currency between a few dozen countries' currencies and it costs 99p. Is there anything else to say?
Well, try it out. Let us know what they think. That's, we always listen to what the consumers tell us to do next. So we're very keen to get more people to try it out, tell us what they think, and we'll improve on top of that.
And so it is an app. You have to deal through an app, or do you deal through the web, or
whatever the preferences are? We have 2 mobile apps, both Android and iOS. We have a responsive mobile product and a web product. So we try to make it as accessible as possible. We also have localization in 8 or now 9 different languages. So if you want to get local customer service, it's also there available.
Excellent. And how have you, talking about the marketing dimension, empires, how have you been spreading your empire? How have you been expanding? Has it been organic word of mouth, or do you have marketing campaigns? Because compared to many fintechs, you've got relatively low capital because of your model. You don't need tons of capital behind it. You're not like being a bank, which requires a ton of capital.
Sure. We think of ourselves as a product business. And the product has been the main driver of our growth. So as a byproduct of that, we have a very successful refer a friend scheme that's really grown our business a lot, because once people trust you in various communities, they will spread the word, and that's been one of the major drivers. And also we've done a lot of local brand awareness, local PR in different communities, just to really be visible, because awareness equals to trust, and we're in a trust business. So that's one of the major question points all the time. Oh, this proposition is a no-brainer, but where's the catch? Because people are used to there being a catch, where there isn't, but we need people to try it out, So we were trying to do this with this, building this awareness and sort of try us out, tell us what you think, and being as transparent as possible. And that really brought a lot of our growth together.
Excellent. And in terms of the future, you'd mentioned the idea, at some point, the pipe dream of zero-fee transactions, which is a fascinating one, because, of course, people in payments have been saying for a long time that fees are tending towards zero. But the problem with zero, as far as I can see, is that when you're making zero per transaction, then your total revenue is in danger of being zero, and people's costs are never zero. So how does that work then? How would it work then? Fast forward however many years you need to.
Well, it all comes down to economies of scale and managing your cost base really well, because people tend to buy real time. People like convenience of getting money there now, which is an innovation, hasn't happened before. So if you combine something new and then you combine it with something which is very, very low cost for people who need it, which is maybe a bit slower, I think a combination of those could work.
I see, which is very much like the episode, whose name has gone out of my head right now, the execution-only stockbroker, digital stockbroker, who will do you a free trade on the London Stock Exchange at the end of the day. But if you want to do it now, you pay a small fee.
Yes, convenience is going to be premium, right. But I don't see the future where a slow money transfer should be expensive at all.
Excellent. Well, that's been extremely simple and extremely clear, which is always very nice. You would be amazed, or not amazed, how many millions of emails I get every day and people wanting to be on the show, which in itself is fine, but how the vast majority of those, despite having done 100 of these episodes and looked through about 1,000 fintechs, and despite having been in City for decades, the average incoming, I can't even understand the proposition, And after I've given it 5 minutes, I think, well, if I can't understand it, how is anybody else going to understand it? But so I absolutely love businesses like yours, which are simple, clear, and cheap, and I wish you every success in the future with your model and your pricing. You absolutely deserve to succeed.
Thank you very much for having me. Thank you.
Thanks for listening. If you have consulting, advisory/non-exec, or media needs in the FS or fintech space, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a bender all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moon ride, watching a happy moon ride. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. The city goodbye. Watch the firelight dance with me. 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 Watch the firelight